Welcome to Investors Guide. Thanks for tuning in and Happy New Year to you and to your family. Now, in spite of the year that we've just had, I do hope that your investments prosper in the new year and you enjoy much health and happiness. Now, this is the final part to our three-part special year-ender series. Now, as this year draws to a close, we at Investors Guide have picked our top recommended funds from every category so you know where to invest your money in the new year. Remember, to help us find those funds, Dhirendra Kumar joins us as always in our Delhi studio. Dhirendra, Happy New Year to you, first of all, and thank you for joining us on Investors Guide. This is the third new year we're bringing in on the show, and it's always a pleasure to have you. You can write to us on the email ID at the bottom of our screen and ask us questions about anything you hear on the show today. Our show will also be available on our Facebook page as well. Let's get straight to it. Dhirendra, before I get into the method you use to pick the funds that we're going to talk about today, I first want to ask you what your lookout is for 2012 and what you're expecting from the equity market. We know we've had a very rough year. The end of the year has been rather rough as well over the last couple of months. But in 2012, given that we're hearing the RBI might be bringing down rates, inflation might come down as well, what's your outlook for our equity market?
I'm very hopeful that it will not be as bad as we have as 2011 or 2009. Because there will be a reversion to mean, and if you believe in that, then I think there will be a turnaround. We still have great concerns about variables that can drive the market up. Right now, we don't have too many variables which can make us very optimistic. But we see that some of the variables will fall in place in another 6 to 8 months because what RBI has said, going by the valuation of equities today. Reason to be optimistic in next 1 to 1.5 years.
All right, so there is reason to be optimistic in the next 1 year, which means we continue investing, which is why we've brought you this list of funds. Now, we've broken down funds based on their category. We've picked 3 out of every category as the top recommended funds that you have on this show. So when you're choosing your funds to invest for the next year, you already have a short list to work with. Dhirendra, before we go into the names of the funds that top our list, explain to us exactly how fund performance has been measured and what factors you've taken into consideration while ranking these funds.
3-4 factors, which drives our selection here. One is that superior performance of funds relative to other funds in their own category. Long history. So, and long history of superior risk-adjusted performance, just not return. The other is, the belief in their own mandate, the purity of style. If somebody is saying that he's going to be a large cap fund, then he better be. The third is that, in some categories, the depth and breadth of management, that has also been one of the reasons.
Now, we're first going to talk about equity funds, and the first category among equity funds we're talking about is multi-cap funds. Now, this is a list of top recommended multi-cap funds on Investors Guide. Topping our list is HDFC Equity, Morgan Stanley Ace and Quantum Long-Term Equity. Dhirendra, I want to ask you about HDFC Equity. Now, this fund has fallen more than its category in the last year, in fact, more than the Sensex also year to date. But it has been very positive when the markets are bullish. Now, tell us why it makes the top ranking in this category.
A long history of consistent outperformance, and this time round, it has always looked little disappointing in down market. But mostly, it has. If you look at it at a full market cycle, it has generally avoided all the sectors where we have seen blow up, and that has happened over the past 10-15 years. So this is a very credible performance, and I think the odds are against this fund as it grows, as it is getting larger in size. But I still feel that there are occasions when this fund is able to make a bet on a sector or on a set of stocks, and has been always ahead of the curve. So that plays out in a full market cycle. It remains a very solid choice for long-term equity investors.
All right, long-term equity investors with a multi-cap fund. This is a consistent performer. Can this be the only fund that I hold in my portfolio, HDFC Equity?
If you have a small amount to invest, if you're a 1,000 rupee SIP investor, by all means.
All right, so let me give you a recap on the top recommended multi-cap equity funds on Investors Guide this year. HDFC Equity, Morgan Stanley Ace and Quantum Long-Term Equity. Those are the 3 funds that we recommend for you in the coming year. Now, our next category is equity large cap funds. This is our list of top recommended equity large cap funds on Investors Guide this year. Franklin India Blue Chip, Goldman Sachs Nifty, and of course the ICICI Prudential Focus Blue Chip Equity Fund. Dhirendra, I want to talk to you about Franklin India Blue Chip. Now, the fund has managed to fall less this year than even the Sensex. Is that what we're looking for when we look for a large cap fund?
I think selectivity plays a critical role in Franklin Blue Chip. There has been occasion when this fund has really not been a high performing large cap fund. It has gone wrong with its sectoral bets or its preferences. But I think it has recovered the lost ground, and in past 2.5 years, it has become an it is proving to be an impressive large cap fund.
There's also been a change in fund management of this fund in February this year. What's your assessment of the new fund managers? And would you say this is a fund that depends on its fund managers a lot?
The valuable thing about Blue Chip is that it has remained a large cap fund across time period, even through those times when large caps were struggling. And that is unchangeable. So I think in that sense, the fund manager's role gets marginalized, but I think investors have greater predictability. And I'm hopeful that the way the fund managers buy into the mandate, buy into the template, and a shared resource in terms of the research backend. So I'm not very apprehensive about the sustainability of the performance.
All right, so let me give you a quick recap on the large cap equity funds that we recommend on Investors Guide for you this year. Topping the list, Franklin India Blue Chip. Coming in second, Goldman Sachs Nifty ETF and ICICI Prudential Focus Blue Chip Equity Retail. Moving on to our next category, we're talking about large and mid-cap funds. And this is our list of the most recommended large and mid-cap funds of the year. Fidelity Equity comes in first, Franklin India Prima Plus and UTI Dividend Yield follow in at second and third. Now, Fidelity Equity, interestingly enough, was rated 22 in its category last year. This year, it's come up to the second rank. What's caused the change in its performance, Dhirendra? Can it hold on to that performance?
This fund, it's been very high on diversification. Even though it claims that it's a bottom-up and stock picking strategy at work. But I think past 5 years through market cycle, it has always been average or above average. Even though it claims that it is not trying to be emphasize any sector, but we find that it has been reasonably diversified even across sector, and stock picking has been good even through this struggling market. Been able to avoid quite a it made a quite big change in its portfolio, emphasizing some sectors which saw far bigger decline. That has worked out nicely, and it may not be a sustainable strategy, but so far it has worked out very well. And in worst of situation, it has been an above average fund. So that gives me quite a deal of confidence in recommending it.
A quick recap on what we're talking about. Large and mid-cap funds most recommended on Investors Guide. Fidelity Equity comes in first, Franklin India Prima Plus and UTI Dividend Yield come in second and third. Remember, these funds are broken up by category and they're picked based on long-term track record, the depth of the fund management, and whether or not they've managed to stick to their mandate. It's not based on the performance over the last year. After the break, we'll talk about mid-cap funds, balanced funds, and of course, tax savers. So don't go anywhere.